So this is the Euro USD analysis for the 20th of November. So let's just have a look what happened with prices on the 17th, was it? On the Friday the 17th of November. So we're going to have a look. So we are on the 17th. The 17th was just there. And what we saw on the 17th is we did go for his consolidation here. Had a probably might be interpreted as a little mini inverted head and shoulders. So we've come down. We've had our lows there. We've had a lower low and we've had a higher low just there before we had a strong continuation. We did have strong momentum breaking above this previous swing just there. This minor swing on the hourly chart. We broke above, just broke above that swing there. After strong, after had a period of low volatility, we saw some momentum coming to the market, as can be seen by the size of the candles closing near their highs. Strong momentum coming to the market, breaking above the previous highs as well. Now we did break slightly above this 1810 level, and we did see a bit of consolidation. I was expecting a further continuation up to 1830. From there, I'll be looking for potential sell side momentum to come into the market, possibly for retest of that 1790 essentially, before we might possibly see some move upwards. Or if we do have strong momentum breaking below it, we're looking at 1770, beyond which we're looking at 1728 and 1710. And what we did see was prices did break above. We did look poised for another retest of the 1830, but what we did see actually was actual breakdown in prices. This candle here, this momentum candle here, was the first clue as to a potential breakdown in prices. Usually in a bullish trend, we tend not to see candles of this size retracing so heavily, and that's what we saw. It was the first indicator of bearish momentum in the market. Now we did we retest the open of this candle? So we'd open at essentially 1812, and we've got the level marked out here at 1810, and this is a weekly pivot. And again, we've had a retest of that 1812 level. Again, we've had a rejection from there with this pin bar, well, somewhat of a pin bar, just there, and yep, just there at 11, which opened at 11 a.m. on the 17th, and we haven't revisited the 1810 since. So what we did see was prices move upwards again, post another lower high. So we've had a bit of a double top there, micro double top, and we've seen the sell side momentum take us all the way down below this 1771 level, which was a strong level. We've had prices oscillating around that level, so we did see some strong momentum come into the market, sell side momentum, and again it's taken us all the way into today the 20th. Now we've come down to 1728 level, and we do seem to have had some retracement just there. We've had strong momentum all the way down to 1728. I think the catalyst in regards to the euro is, I think, Angela Merkel, the biggest economy in the eurozone, Germany. They're having difficulty forming a government, so that is, sorry about that. That does add to the fundamental bearishness of the euro. We had a couple of weeks ago the ECB extending QE to September 2018. Now coupled with there's a degree of I wouldn't say it's turmoil. I wouldn't say that would be too strong a word, but there is a degree of instability in regards to the eurozone's largest economy, second largest economy, France. They did have some stability in Macron coming in, but in Germany there are some difficulties as there's been a divergence of policy, so she's having difficulties forming a cohesive coalition. Now let's just anticipate. Let's just see if we can anticipate where prices are likely to go. So we are seeing a bit of retracement here. So if we do not see a shallow retracement and a strong continuation down to 1770, we might see a stronger retracement all the way up back to 1771. So the most recent trend where we've got our highs here in around at 1860, a lower high in around at 1820. So we've got a high, a lower high, and I wouldn't count this one here around 18. So 1820, 1860. So we're expecting further continuation to downside. So if we do retrace all the way to 1770, we see some more sell side momentum. Again, we've had another lower high, so we're definitely expecting to see our price behave around that major level in around that 1710. By the time we get down to 1710, the 200 period average might be there, so we might see a heavy retracement upwards to possibly that's to where our previous swing, well, we could retrace all the way back to 1770, but we'll see our prices behave in around 1750. In around 1750, we'll see our prices behave if we do see more sell side momentum taking us all the way back below 1710. Overall, though, we are bearish the euro, so we are looking for possibility selling, looking for potential selling opportunities, so possibly 1770. Or if we do turn around before then, we'll be targeting 1710 as a major level. We do have the 200 period average, which may act as which is here in blue, which may act as dynamic support. We've also got a 400 period moving average again, which may act as dynamic support. So the 400 period average, we can see over here, it has held as resistance before we saw this broke out, where we came pretty close to it before we saw this strong bullish move upwards. Now, if we do break below 1770, these are going to be medium-term targets, by the way. So we aren't anticipating prices moving much beyond the high 16s, depending on, well, we're at 1740. Actually, maybe as the European session does open, we may see further volatility taking us all the way back down to this 1612 level, actually. If we do successfully navigate the dynamic levels as well as horizontal levels of potential support, so in around at 1728, 1710, after which we'll be looking for the next major level would be 1612. So if we do successfully navigate the 200 period average, the 200 period average, and the 400 period average, we'll be definitely looking at 1612, which would be which is a strong major level for a potential bounce all the way up to possibly at 1710 level. Now, beyond 1612, we did go all the way down to let's just have a look. It was in and around 1560. I think that's, yeah, 1560 was the level that we've previously had a swing. So we're just going to go over to the 6-hour chart here, and there we are. There's our swing just down there. So in around that 1550 level, just going to mark it out of the charts for a reference. So we let's just have a look. So it was in around 1555, so it's about there. So we've marked it out on the chart as well. We've had a let's just see, we've just had a low there and a lower low there before we saw this stronger bullish move. So we do have to potentially anticipate, if we do trade below this 1612, for prices to come down and find support where it has found support before, for a potential bounce, possibly all the way up to 1612, beyond which we're looking for that 1770 level. Now, also, as we did see a low before we had our most recent lower low, we're going to obviously mark that on the chart as well, just for another reference. So it's important to be aware of these levels, as we do see momentum come into the market in around those levels. So we're just going to mark this level out here as well, even though it's going to be a pretty tight zone. So it's about 1580. So 1580, 1555, in and around this zone here. I'm just going to grab the pen. In and around this zone, we potentially see a bounce in prices all the way up to 1612, even to possibly these most recent swings, but the major level we'll be looking at is 1710. Now, I can't anticipate prices going much beyond 1550 here on the 20th. So those are the levels we're looking at to the downside. To the upside, again, if we do see a heavy retracement, I do expect it to be limited somewhat, but if we do see a heavy retracement, we've mentioned 1771, potentially 1780 this weekly pivot, or the most recent swing in around that 1810 level. Those are the levels we're looking to the upside. Can't anticipate much. Don't anticipate us getting up there, but we may see a V-shaped reversal. We might get some news which is euro positive, and we may see a strong reversal on the euro. So we're going to have a look at the monthly and weekly time frame before wrapping up here. So we're going to, and the daily as well. So we're going to go out to the monthly time frame for a big picture view. Now, on this monthly time frame, I'm just going to grab a pen. We did come down into the low I think it was 103, 105. We did find some support in around there, 103 to 105, and we've had this very strong move on the euro since the Macron election. Now, we've had a strong move up all the way up to the psychological number of the 120. We briefly traded below 121, so we trade up to 120.92 before we saw this bit of a pullback here on this monthly chart. Now, the pullback has been pretty strong. We've got candles. We've had a candle. The previous month's candle did close near its lows, the month of October, and we're operating in the shadow of it, but we are somewhat bullish. So we did briefly trade below the low of the candle, but we have seen some buy side momentum, possibly almost taking out the high of the candle, somewhat invalidating it. So the high of October was in around at 1880. Now, so far in the month of November, our high is around at 1861. So it's in around 19 or so pips below the actual high of the previous month, which is a good sign that we almost trade above the previous month's high. As we can see here on the price action. So what we've got here is a move upwards. This does appear to be a bit of a pullback. Now, if we do post another bullish month here in the month of November, we could potentially look for upside momentum for retest in around at 120, well, 119.10, 120.30 before we're looking at 120.92, which is the most recent swing in the market. So we are still operating on a overall bullish trend here on the euro against the USD, especially on this monthly time frame. We have not had a too deep a retracement to be concerned for in big picture view for us to be concerned in regards to the euro so far. And we was concerning it, especially in the shadow of last month. We did look like a deeper retracement was likely, continuation through in the month of November, but we have seemed to have caught a bit in around that 16, well, the 1550 to 1612, in around that zone there. We have caught a bit of a bid, and as we've seen, we've had a strong move upwards. Now we are seeing some bearishness at present, so there is still time for this month to end bearish. But overall, we do appear bullish at the moment, and it is in line with the higher time frame trend of being an uptrend on the euro against the USD. So we're just going to have a look at the weekly time frame and the daily before wrapping up here. So we're going to go over to the weekly time frame, and again, we did see a bit of a gap in around that Macron election. The gap hasn't been filled. We're just going to mark that out. Well, here it is already on the chart. So in around there, we've had a Macron election. We've had a strong move, brief pullbacks all the way upwards to that 120.92. We've seen a pretty strong retracement. Well, not strong, I'd say. We've seen a retracement here on the euro. So we've got a 200 period moving average. Again, we've come down to this 200 period moving average. So we're currently in and around that 200 period moving average here on this weekly time frame. So we did find support in around 1612. We did break above the 200 period moving average. So if we do have a look so far this week on the 20th, we can see we are in bearish territory. We did see some sell side momentum come into the end of last week. We do have the 200 period moving average currently sitting at 1641, so it's just above the 1612 level. We might possibly see find some support there, but again, that's dynamic level of support we might see in around at 1641, the 200 period moving average. We do have a 20 period moving average, which will come into focus as well. And the 220 period moving average is around at 1774, so it's pretty close to the horizontal level of 1771. So we do have to be aware of that 1771. We did mention that we might see a retracement all the way up to 1771 before we see some sell side momentum. So in around that 1771, the horizontal level, we've also got the 20 period moving average here on a weekly chart, which may act as further resistance for some more sell side momentum, possibly taking us down to 1641 and 1612. 1641 being a dynamic level based on the 200 period moving average here on a weekly time frame. Now, if we do hold this candle from last week, this bullish candle, which did open at let's just see where we are. It did open at 1656. If we do operate within the shadow of that candle, it is a bullish candle. Previous week to that, we did see another bullish candle closing near its highs. But we're looking for that 1656 to hold. If we do trade below 1656, it will somewhat invalidate the bullishness of this candle, possibly putting in a lower high. So we would possibly have a high up there, and we've had another retracement. A retracement for a continuation downwards. Again, this would be a retracement for a potential continuation downwards, so that's 1612 level. But if we do operate within the candle's range this week, we could possibly interpret that as being a bullish sign, especially if we close closer to the candle high. It may not be a bullish week, but if we close closer to the candle high, then it's low. It may be somewhat indicating that there is a degree of bullishness on the euro, despite the fact that we have had some fundamental news which is weak in regards to the euro. So let's just have a look at the daily time frame before wrapping up here. And I'm just going to go over to the daily time frame. So over here on this daily time frame, let's just grab the pen. So we've got it like we've mentioned before. So we've got our highs up here. We've got lower highs just there. We've had a strong sell side momentum. We came down to this period of consolidation and we broke out above it, somewhat negating some of the bearishness from over here on the left of the chart. Now we've put in a bit of a pin bar just there. which was the first indicator of some weakness here, and we've seen further retracement. Now, so far this week, and we have had we do appear to be putting a deeper retracement, so we do not look poised for continuation at present. Usually continuation patterns are small candles in terms of the retracement, and before we see more buy side momentum coming to the market. Instead, we're seeing a pretty large candle being posted at present here on the daily chart, but we do have quite a few hours before this candle actually closes, so it's yes, so we'll see how we do behave during the European and US session if we do see the further retracement negating some of the bearishness, but it's quite a bit of retracement so far. So we'll see how this candle develops, where we do negate this very strong bullish candle over here to your left with the orange triangle below it. Now, overall, like we mentioned, so we've got our highs, lower highs, and we do look poised for another lower. Well, it may just be somewhat neutral, but possibly a lower high for a continuation all the way down to that level that we did find support at before, below which we'll be looking at 115. Again, we won't expect price to get down to 115, so medium-term target for potential buy-side momentum to re-enter the market. So we may see retracement before we have continuation to retest those levels above us that we've already mentioned. Now, that should wrap up the euro-dollar analysis. Thanks for watching.